So I will take control of the roving microphone, and my my panelists also have microphone there, so you can respond, as well as we did this so that they have headphones, which means that you can ask your question in English or French. And it also means that, at least in the case of one of my panelists,
intelligence was being used for processing health insurance claims.
As I was saying, at least in the case of one of my panelists, we will get an answer in French. This is correct, right? Yes, because he's not quite as Chinese as he looks. He has... Your mother or your father is French?
My father is French.
His father is French, so il parle français. Okay. So does anyone in particular have a question to start off, or will I ask one while you think of one? We have a question already, so I knew this would be interesting from the beginning. If you press this button, we should be able to hear you.
Hello.
How did you sell that coin to a...
One, two, three, it works. So the first aspect of it is that when we went for the first times to sell it to the insurance regulator in China, we went to sell him the ideas of a project which was built in a form which was not insurential by nature, by the way it was built, but still wanting to go to see him and discuss with him, because we know that he will have an interest in knowing about it, because we are in still in a parallel universe, at least. And we wanted him to know that we were careful and prudent in protecting the user. So when we want to do that, we have been focusing on trying to show that the level of protection and security and the margin of security to cover the risk of fraud, the risk of negative bias, the statistical deviations which go around it were well taken care of on one side. The second thing we insisted on is on the fact that this framework contract is not providing for, like an insurance contract will do, for you have a guarantee of this amount of indemnity. The contract between the members is providing for them to share with a target amount of protection, which is a cap, but within the contract they sign together, a clause clearly expressing the fact that in the cases of extreme frequency, the amount of the help derived from it will be adjusted according to the excess. So it's mostly a matter of transparency, so that the user have a good understanding of it. This being said, the level of protection embedded in the model was very substantial. In reality, in all our years of activity, we never got even close to reaching this level where the indemnity will need to be reduced. So we have been quite happy about the result, and the user as well. And I think the reason for it is fundamentally that the behavioral elements in the community has been positive. That people got the right understanding of this is something that we need to protect together for the benefit of most. Right. The regulator told us, be careful, don't mention that this is insurance. That's what they told us. They said, okay, it looks like you're doing the things properly, but don't write it as being insurance, because if you write the word insurance, or if you imply that it's insurance, you're not, and you should not be able to do that.
Yes, that's interesting. We will come back for another question, but my friend here at the back, I remember, was very skeptical about the idea that introducing innovations could be negative. In fact, you were very concerned about that, as I see, when the voting was taking place. So I wonder, Mia, if you could tell us from the results of your study and survey, how much perhaps you were able to identify all these different innovations that you saw taking place. Are they designed to be positive for the customer? Are they designed to be positive for the insurance company? Does it all really work out as promising as it being positive?
So I think it's difficult to see the ultimate impact on the customer. In many cases, the innovations improve the business model, so it affects cost, which of course, if get passed down to the customer, that's typically positive. But some of the models do rely quite a lot on behavioral interventions, and I think we're still learning around the extent to which it's possible to manipulate people, and of course if you manipulate somebody, it can be in their best interest or not. So often what we see is that, especially with longer term decisions like insurance and pensions, you want to put aside money to, say, protect your family, you want to behave responsibly, but you've got the immediate needs that come up, the immediate costs that you need to cover. So you often quite like the fact that the product that you engaged in manipulates you in some way, or allows you to give up control to a degree. For example, a debit order or something like that also allows you to share similar control. I think where I'm worried about the exclusion element is with things like was mentioned around, particularly things with where you really get deep insight into the risk profile of people, because that allows you to exclude in a very targeted way, especially if you're looking at things that are just not under people's control, like health and health wearables, or similar types of interventions. But to be honest, we now actually interviewing quite a few regulators on the topic, and we haven't yet seen significant abuses. But I think it's early days, and I think in a lot of instances it's probably not in a business's interest to actually disclose any of those topics. So I think it's something that we need to guard against, but we haven't seen mass abuse or anything like that.
So that might be like, there are several other examples, I think, in different areas of innovation where we often think of things that could go wrong, but then if you apply the test, well, have there been any cases? The answer is, well, maybe not yet, maybe not for the last 5 years. So we do have to balance the practical reality sometimes with the hypothetical possibility. My friend.
Right. Thank you for the question. Now, just to also bring into the perspective, the Kenyan regulatory framework is very explicitly requiring the regulator to develop the market at the same time to do consumer protection. What I've seen with other different regulatory frameworks within different jurisdictions, you'll only see the regulator is highly focused on consumer protection. So with that, it kind of becomes very difficult for the regulator to kind of shift in a way that they still conduct market development and also do consumer protection. So that might be the first difference based on our regulation and what we've seen in different jurisdictions. But also, not only withstanding that, it's quite important to ensure that that particular balance is maintained, because most of the time you'll get that the regulators are highly focused in protecting their consumers. They are not keen to listen to what the market is saying in terms of new developments, new innovations, and they are quite fearful. I think regulators are they really fear innovation in a way, and most of the time and most of the time, based on how, when you're approaching a regulator, most of the time they'll say, from where I sit. That's a word that they really like using. We don't see this thing really making it to the market. And basically what they did to Tanjubao is that most of them, they'll say, don't use the word insurance. Other than just looking at, and maybe I can give an example. There was this particular product was called MT-Bar. MT-Bar didn't have an explicit insurance component in it. When this particular product was brought to our regulatory office, we realized that if we shied away from that, it will kind of reduce our penetration within the market. At the same time, it will not reach the target group that we always desire to reach. So we had to sit down with the inventor of that particular product, try and advise them on which components they can bring in that are insurance in nature, how they can structure their service level agreements with their partners. And currently, that particular product has over 1.5 million users, a micro health insurance product that is really driven through a mobile wallet. So mostly what would advise is that it's good to listen to the regulators, to the innovators. At the same time, we really need to have regulations that also bring in issues of market development, not only on consumer protection.
Yes, Luke.
All right. The first thing is that usually I'm presenting it to the regulators as not being insurance, so that the regulator don't need to fear too much, and to ensure that I'm able to develop it and start experimenting it without having to wait for 10 years to have a regulatory approval. So I will describe it as not being insurance, and it's built in terms of the way it's structured legally in order not to be qualified as an insurance. This being said, two things. The first thing is, do you have a definition of insurance in your market, in your law? And very often it's not very precisely defined, the concept itself of insurance. So you have to ask lawyers, a law firm in the country you approach to try to elaborate on it to define it. In some countries, they will do it. In some other countries, they will not even dare to try to do it because they know that in such country with such regulator, it's the regulator which is defining the law and not the law which is defining what the regulator shall say. So that's limit the way you can want to use the legal framework to define what it is. Yes, the second thing, and very briefly, and I'll give you the word, is fundamentally what we are talking about is protecting people and allowing people to protect each other. So whether you want to define it as corresponding to a specific insurance amounting to a specific regulations or not is, of course, important from a legal standpoint, but in terms of the purpose, which is to allow people to be protected, it addresses the same issues, of course.
Quite interesting, and based on what I'll share, I'll kind of share based on my the understanding, my own understanding. This would have been quite a very interesting product, and maybe what the Chinese regulator could have done was to look at it in a different way. One of the risks that intended to, or maybe could have reduced in our context, is issues to do with fraud, because you have a group of people who are working together, and this particular group cannot be fraudulent to themselves. So that's a very big issue in Africa currently insurance is facing. Secondly, is issue of perception. Africa, people perceive insurance differently. With P2P, perception changes. People will perceive as if they are protecting each other, and someone won't really view that particular arrangement differently. So what maybe the regulator could have done was that this particular product was protecting a group of people up to a certain level, but what really happens if they really need to have an excess of loss kind of arrangement? So they needed to tell P2P to partner with an insurance company in a way to protect beyond a certain level of risk, other than just allowing this money not to really fall within the insurance sector and kind of reduce the level of penetration. So maybe what they could have done is to look at that particular arrangement. If the loss is beyond a certain level within that particular group, we can insure it, more of a reinsurance structure, and then that becomes some form of insurance, other than basically fearing it and saying, okay, fine, don't use the term insurance.
Sorry, I just have a question to both of you, because I was wondering whether your model isn't actually very similar to something like a burial society, which is really mutual risk sharing, no indemnification, and some of the burial societies in Africa get quite large. So a lot of us already have burial societies in our market, and I think it's a very powerful tool, that mutual risk sharing, if you can get the tech to work, and as you say, not be corrupted, and you know, because you have fraud issues, you have data security issues, etc. Is it not already something that's actually quite common in the informal sector?
Thank you. So my question is a follow-up from what Luke has actually asked. Given you've already presented on the P2P, and it's like from what Tang you're saying, or from what I've taken from your presentation, when I'm looking at microinsurance, it will not succeed if it goes through an insurance company. Only if it is being sold as a peer-to-peer kind of product. So do the rest of the panelists agree with the same perception as Tang? Or given that we've seen cases, for example, in Ghana, where they've set up insurance companies to specifically sell microinsurance. But from the presentation from Tang, that may not necessarily actually work.
And I will come over here so we can have the questions all at once for efficiency.
Merci. Je vais demander de mettre les casques pour la majorité, parce que je vais poser ma question en français.
Because I am a regulator. to answer for regulators, but it's more than 2 decades that I have been doing only that. I have only been controlling. I've been thinking about the policyholders and the protection of the market. I am a supervisor, and there are laws which govern our activities. For us, for a supervisor and regulator, they don't do things by their own wishes. There are laws, and you bring in innovations. But if we take something, for example, if we take the criminal code, for example, if you are told, the law says if you steal a cow, you go to prison, but you might go before the judge and you may not necessarily go to prison. And so it is not that he is afraid of innovation, but it is just that things go faster than the regulator. Currently, the regulator is a bit late with regard to many issues. That is a fact. If one wants to achieve a result, it is necessary that a number of things be done at the level of regulation. I often say in these types of meetings that most of the time the examples that are given to us are very interesting, but very often they also distance us from the reality in many countries. If one says Africa is the African share of the market is only 2%, well, is it yet South Africa? And then you talk about South Africa, and the figure is different, but South Africa's example is not necessarily representative when you are talking about insurance. Miguel Sonala, who is working on micro insurance, I asked him, what do we want when you talk about micro insurance? Senegal is in Senegal, agriculture is the major activity, and if you want to scale up microinsurance in agriculture, well, you need the necessary rainfall pattern for it, and we have done a lot of things in the world. We know that the farmer needs to feel situations. We need, even though we need manual rain gauges we need the situations where the farmer can be very much aware of the rainfall pattern and things that happen, be it in Ghana or Kenya. We need to develop programs, and we take we take inspiration from the examples from many countries. The development of micro insurance through technologies is possible, and we need a lot of innovation from the point of view of the regulator. We need a lot of support, and we also need a lot of financial literacy. And that is something we insist on very much in Senegal, and we also work with FANAF, is the Federation of African Insurers, and so that together with the regulator we could all find the best way of having the appropriate regulation in the area of microfinance. The people are left, the practitioners are left to start before the law has been created, and in our case we established the rule first. For example, we have regulations in many places before the activity started, and it looks as if sometimes activities are started before regulation comes in. So we all need to find solutions to some of these problems. Thank you.
We probably have to now wait a little for the translator to catch up.
Thanks. So I'm happy to tackle the first question, and then maybe you can also comment around whether microinsurance can work in other models than the peer-to-peer model. I think it definitely can. If you look at Ghana, 3 million policies are sold through M-insurance initiatives by Bima and Microinsure and others. And that's with an insurance license. It's a very classic microinsurance model. I think the peer-to-peer model is an interesting new one, and I think we need to think about how we can create legal spaces to responsibly encourage such models to grow. As you say, nurturing is required, but I think a lot of other microinsurance models are possible. It's not just the peer-to-peer model that provides value to clients.
I think the question was quite lengthy, but I'll summarize my answer in a way. Regulations are always evolving, and in essence, we cannot really be able to afford that each and every country will be at the same level. What is really needed, and maybe what they need to do, is to have what we call risk-based supervision in place that is more principle-driven. So that basically sets structures. So for instance, when we talk about consumer protection, what are the structures? The structures are things to deal with how to treat customers. And within that particular framework, there's some flexibility based on the scale and the complexity of the business strategies that the companies will be coming to the regulator. At the same time, when we think about the prudential side, things to do with capital, things to do with the requirements, things to do with governance, all will be driven through principles, and those particular principles kind of allows the regulator to think through how to manage their sector much better. The biggest challenge maybe in other or different jurisdictions will be mostly you get that the regulation are still compliance based. It's more of check a box. So it's more of asking the company, do you have 1, 2, 3? And maybe what they are presented to you might not really need all those 3 items that are required. So you'll get that this company might come maybe after 5 years and the opportunity has already gone. There's a saying in Ethiopia that says that a lion wakes up and it has to be running. And because if it doesn't run, it won't really catch the gazelle, because also the gazelle wakes up and the gazelle is running. So each and every morning, each and every animal should be running. And that is all with the regulations. The regulator should be on the run. The antelope should be on the run, so that no one is eaten by the loss of time. Thank you.
With that sentiment, I think it's probably good to observe, and we'll see this, I think, a lot over the next couple of days, just how much things change in a short period of time in this space. So the one thing we have to be more than anything else is flexible. If we invent some structured rules for today, they will probably be out of date tomorrow. So we must make sure that we keep our structuring in a way we can be structured in a flexible way. That would be good. That's the ideal situation. Fortunately, we are sufficiently flexible to have used 4 minutes of the coffee break. And I think that means that Janice might give us a little extra coffee break, and also an opportunity for the people who were not able to ask their questions to approach the panelists directly. I'm sure they'd be very pleased to talk to you during that coffee break. Thank you very much for your contribution, and thank you very much for your questions and your attention.